Good morning, everybody. Mike Vacchi, Princetontrader.com here with your Tuesday market webcast. All right, so we've had this little box up forever. The bulls are trying to convert the top of the box. They broke out of it back on the 18th. They've come back to try to test it a little bit here. Basically, what's happening now is you've just got this general battle over 4,200. We'll go 10 handles above it. We'll go 10 handles below it. We continue to migrate back into it. You can see that on the hourly chart. We've just been consolidating. So Friday they popped it, did 42.2725, brought it right back into the close, closed it 41.98 quarter. They walked it up a little bit yesterday. Did as high yesterday. They did as high as 21.75, and it comes right back in. Comes right back in. Walk it up this morning 22.75 and right back in. So I guess it's more like 42.20 to 41.90. It's got to find its way through. But the overall point is that it is, look, unless the bears really come in and do something about it, and look, they look pretty strong in various points in time over the last few sessions. Unless they come in consistently, knock it down and keep it down, the market over time is going to get more and more comfortable trading above that big box, trading above 4,200. And once it does that, converts that 27, you get into things like 42.50, 42.77, things like that. So that's really, for me, what this week is about. As we get further into the week, you're going to see more and more econ. There wasn't really much yesterday. So, it's just a battle. You see the new weekly pivot down there, 41.81.83. The best thing the bears could do for themselves would be to close below that today. I mean, that's only 11 handles away. It's not a heavy lift. They just need to execute. And bulls, okay, we're up here. What are you going to do with it? What are you going to do with it? And it seems like the bigger picture is until we get direction, until we get resolution, I should say, on this whole debt ceiling thing, it's going to continue to consolidate, come back into areas where it feels comfortable. And the market feels most comfortable battling between 4,100 and 4,200. So until we see some resolution, that may be what our lot is going forward. So where are the numbers today? You got volume weighted average price sitting up at 42.07. Daily pivot comes in 05.33. Proprietary moving average in the 5-day mid-band are locked up at the roundy at 4,200. And what we've seen since 7:30 is, a little bit of a push down. Nothing massive. I mean, it looks huge on a 5-minute chart, but it's only 11 handles at this point. And I'm doing this at a couple minutes before 8 Eastern time. So watch the roundy. Watch 42.20. Bears need to close below weekly pivot, stay there. Then you start getting back into things like the 9-day that are sitting around 41.70 if they can get that done. But for now, we continue to consolidate. We're just consolidating in an area, above 4,200. Essentially, 70 handles above this. So, I guess the last thought I would leave you with is, everybody that wants the market down in a big way, these long consolidations have to stop popping up and turning into more consolidation. If the bears are for real, then it should consolidate, go down, consolidate, go down, consolidate. That's not what we're seeing. All right, everybody have a fantastic day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.